Hello friends, I am Money. I am the blogger behind getmoneyrich.com. Today in this video, we will try to understand how a common man can build a stock portfolio of his own. The main hurdle for a common man in building a stock portfolio is they cannot decide which are the best stocks to buy, and the reason why it is difficult for them to pick stocks is because they do not know the process of stock analysis. So is there any way where a common man who doesn't know stock analysis, how he can build a stock portfolio of his own? So in this video we will do just that. So this is the portfolio building strategy, do it yourself kind of portfolio building strategy. So what we have to do, let's see. So as I told you, the main hurdle for a common man is which stock he should buy. So the answer to this question can be taken from this. A common man can choose to buy the constituents of Sensex. Generally, Sensex includes only those stocks which are fundamentally strong and which has a good potential to grow in times to come. So to make the process of stock selection absolutely easy, a common man can choose to buy Sensex Constituents. So what are these Sensex Constituents? These Sensex Constituents are these 30 stocks. You can see the list from serial number 1 to 30. These are the list of 30 stocks that become a part of Sensex Constituents. For sure, with time, the constituents, some stocks get added and some stocks get removed from the list, but always the list remains as 30 stocks. So once we know that which stocks we have to buy, these are the 30 stocks that we have to buy, I have assumed that we are buying only one number of each stock in the portfolio. So allow me to show you what happens when we buy these stocks, one number of each, and hold it for a very long time. What happens to our capital? So but before that, allow me to define what I mean by a long time. Long time means what? Let me show you. I have assumed that we have started purchasing the stock in August 2006. Please note, this is the period which is before the stock market crash of 2008. So I've assumed that we have started purchasing stock in 2006 and we have went on and held those stocks for 15 years. It means we bought the stock in August 2006 and we went on to hold till August 2021. So it is a period of 15 years. It's a long period. So what happens to our money when we buy Sensex stocks and we go on to hold it for 15 years? Let me show you the effect of this long-term holding. So you can see the stock that we bought in 2006 was worth 10,000 rupees, which in these 15 years became 97,000 rupees. So this is a growth rate of 16.3%. Here are the few milestones that I have indicated. See, in around 2007 2008 the stock market crash of was beginning to happen. This was the 2013 and 2014 phase. This was the period where UPA government was going out and the BJP government was coming in. So this is also a kind of a milestone period, because after that you can see the stock market has risen gradually post that. And recently in year 2020 we had this COVID crash. So this holding period of 15 years have seen three kind of milestones. First of all, it saw the biggest crash of 2008. Then it saw the stagnation period of UPA2 government, and it also saw the COVID crash. So even after seeing these three kind of you can say not so good economic environment, still this portfolio grew by 16.3% per annum. So let me show you another example. When we say that we are going to buy Sensex Constituents, there is another parameter here, that not all stocks of Sensex are weighed equally. Like we bought one number stock in our previous example, but if we really want to replicate Sensex, then we cannot buy one number of each. We have to buy large number of some stocks and fewer number of other stocks, because this is the way the Sensex is weighed in the stock market. So what is that weight of each stock in the Sensex? So here you can see all these 30 stocks are listed, and in this column you can see the weight of each stock. So which is the heaviest stock? Reliance Industries has 11.75% weight in the Sensex. That's why you can see you have to buy 19 numbers of these stocks. Similarly, the next heaviest stock is HDFC Bank, which is 10.52. So you have to buy 17 numbers of these stocks. Similarly, Infosys is the third heaviest stock, which is 10.38%. So you will have to buy 16 numbers. So similarly, in this portfolio, what we are doing, we are buying the Sensex Constituents, but we are buying as per the weight of the stocks in the Sensex. So what happens when we buy the stocks as per Sensex weight? Allow me to show you. So this is what happens. We bought stocks in 2006. The purchase cost was approximately 38,000 rupees, and then in 15 years it went on to become 4.3 lakhs. And this is the growth rate of 17.4%. So in this period, again, this portfolio saw the 2008-9 crash. It saw the stagnation period of the UPA2 government, and it also saw the COVID crash. So if you are holding on to the stocks as per the Sensex weight, the growth rate will be 17.4%. Next example. In this example, what I will do, suppose you are somebody who thinks that the finance stocks are going to do well in times to come. So what you will do, you can go finance heavy. What I mean by finance heavy, let me show you. So these are the same 30 stocks, and you can see in the financial sector there are banking stocks, there are some other related financial related services providers are also there. So what I have done, that I have kept all other stocks quantity as 1, but these finance for finance sector I have increased the quantity from 1 to 2. So all these finance stocks I have assumed that we are purchasing 2 numbers. So that's why I'm saying we are going finance heavy. So in this portfolio, which includes only Sensex Constituents, but we are buying a finance, we are maintaining a finance heavy portfolio. What happens if we have a portfolio like this? What will happen in these 15 years? Allow me to show you. So this is what happens to the finance portfolio, finance heavy portfolio. In 2006, the cost will be 11,000 rupees, and when we hold on to this portfolio for next 15 years, this portfolio will become 1,28,000 rupees. This is again the growth rate is again about 17.6%. Another example. Again, we are buying the Sensex Constituents, but this time we are going auto heavy. Means we are bullish about the auto sector, and hence we are buying more of auto sector stocks. So this is the automobile stocks, and you can see I have kept all other stocks as 1 and I have increased the quantity of auto sector stocks as 2. So this is the meaning of auto heavy sector. So what happens when we go auto heavy? So in auto heavy stocks, you can see the initial cost was 12,000 rupees, which went on to become 1,08,000 rupees. And this is a growth rate of 15.5%. So in these 15 years, we have seen a portfolio where we are buying only one number stock. Then we have seen an example of a Sensex portfolio where the weight of stocks was adjusted as per the Sensex weight. Then we have seen the finance heavy portfolio, and we also saw a auto heavy portfolio. In all these examples, the minimum return that we got was 15.5%. So for a common man, this kind of return is not bad, but the only criteria here is we have to stick to the Sensex stocks, and we have to hold these stocks for a very long time, like 15 years. So this is a very simple portfolio building strategy. I hope you will get some idea out of it that how you can start building your own portfolio. Thank you very much for watching this video. Hope to see you soon.